So you guys know from the first panel that we do a fun fact to introduce each of the people here. And I'll do a bit of their intros too. But, you know, Pascal, I'm looking at this. Where's your fun fact? You sure? Okay, I'm just giving you a hard time. All right, so Pascal's the president of 3IQ. And if you guys haven't heard of 3IQ, they were one of the first, and should have been the first through the gate, to become a Bitcoin ETF in Canada. So 3IQ has been leading the way for a long time. Pascal is proud to lead 3IQ in support of making crypto safer and more accessible to investors across Canada. He is also the co-founder of Stand Advisors, who work with many of the fastest growing companies in North America, 25 of which made the Globe and Mail 500 fastest growing companies in Canada. And Pascal's fun fact is he loves dogs, and he has 2 Chihuahuas, and he volunteers at his local animal shelter. Thanks, Pascal. Kris Reed, he is the co-founder of Neo Financial, which a few of you may have heard of. He's the co-founder and head of technology at one of Canada's fastest growing fintech companies. And last night I asked Kris, hey, how many people do you have now? And so from the time we wrote this down, it's more. So it's actually now over 700 employees, and Neo is on a mission to disrupt and reinvent banking for everyday Canadians. In a previous role, Kris has worked with Coinbase, Bitstamp, and Kraken, helping them set up payments and overcome regulatory challenges. And I'm going to give an extra fun fact, Kris, because you gave it to me last night.
Sure, go ahead.
And he's the only non-skip the dishes founder at Neo. But his other fun fact is in his developer days, he wrote version 1 of Stripe's official Android development tools and SDK. So he has some, serious street cred in his programming abilities. And Julie Bogle is a partner in Securities and Capital Markets Group at BLG. For some reason, the bio in here is missing, but I think Julie's awesome. And she helps a lot of companies in the fintech and blockchain sector, and she's traveled to more than 40 countries before she turned 30. She's lived in Oman and Jordan for 6 months. And last but not least, Pamela Draper, who's the CEO of Bitfo and the president of Pateno Payments. So Bitfo is a cryptocurrency exchange launched in Canada in 2018. Prior to joining Bitfo, Pam spent approximately 14 years with top-tier Canadian banks, involved in all facets of investment banking and advisory services. So you can see our panel is pretty awesome. They're going to have lots to say. I was just reflecting last night when we got together how much has changed and is accelerating in the fintech sector. And I've got to say, the backgrounds of the people on the panel and the people we were speaking with last night, it just really goes to show you that smart, motivated people can make anything happen. And I think there's a lot that we're going to talk about here today to explain that, and I'm really excited for it. So people might ask, well, what is fintech? I think that's honestly a pretty loose term these days. So it's generally in the financial services sector. 2021 was a breakthrough year. Crypto hit a $3 trillion market cap, and close to 4% of the world's population, more than 300 million of us, participate in the digital economy through purchasing, trading, and using crypto. Leading financial institutions like Morgan Stanley, exchanges like New York Stock Exchange have also joined in, and they offer products and services to meet the demands of this accelerating market. There's a brain drain from traditional FSI into fintech and crypto. It's really crazy, actually. So most of the largest companies in those sectors have postings for a lot on the crypto side, but in general, fintech. So with that in mind, I would like to kick off with our first panel question. And like I said, everybody does come from a different background, but it's very interesting how everybody has come to fintech, and there is a crypto angle for all of us, which you may or may not be surprised about. So it'd be great to hear from each of you about your individual journey into the crypto sector, and did you come from a traditional finance background? If not, and what attracted you to the industry? And to make it easy, I'm just going to start with Pascal, and we're going to head down the line.
Sounds good, thank you. So no, my background is not in the traditional finance industry. It's actually from scaling disruptive innovation. So my background is in distributed systems from an engineering perspective. And in the mid-2000s up until the early 2010s, I was scaling a few companies in the open source space. And from a Bitcoin perspective, I got exposed to Bitcoin very early on through some people in that space. Invested a little bit, but not too much. I was still very early on. But I kept really exploring what that meant and the potential of what Bitcoin could do and what blockchain could do. And finally, in the mid-2010s, after I sold my open source company, really re-explored the blockchain, re-explored Bitcoin, and went all in from an investment perspective. And I also just then started consulting in that space, which then led me to launch a multi-strategy Bitcoin fund, and then eventually led my way to 3IQ. So technology background, open source disruption is really what led me to the space, and I'm proud to be here today. So,
Thank you, Pascal. Kris, over to you.
Yeah, so my background's more on the tech side. I started my career as a software developer right here in Calgary at Shareworks, formerly Solium, right? So they're in the finance space, or fintech space, I guess you could say loosely. But I never thought of myself as a finance guy. I did a startup, tried to create one in the dental space. That's definitely not fintech, even no matter how loosely you define it. Teeth are not fintech. Eventually actually started a company in about 2014. It was a payments company. And actually at that time, I didn't know anything about crypto or blockchain. Our goal was, of course, to serve the oil and gas market. That was the kind of plan with this payments company, helping pay contractors and things like that. And we were a struggling startup company at the time. There was like maybe 4 people. We're operating out of a basement. We don't have any money. Something I'd been doing for many years at many different startups, and actually got approached by somebody, and they said, "Hey, how would you guys like to do payments for us?" And we're like, "Well, what do you need us to do?" We're a cryptocurrency exchange. We need payments. Can you do it? And I was like, what's a cryptocurrency? I mean, how much are you willing to pay me? And they're like, we're a paying customer. We'll pay you guys to do this payments work for us. So honestly, just lucked out. Stumbled into the kind of cryptocurrency space. That company ended up being CA Vertex, which was a pretty big exchange in cryptocurrency space, especially at that time, 2013. I think they were the largest exchange in Canada by a lot. We started doing payments for the crypto space at that company, and I had the fortune to process payments for almost all the leading exchanges of the day, and I learned about Bitcoin. Bought some Bitcoin, lost a bunch of money on Bitcoin. I like to buy high and sell low. That's it's a real strategy for winning in crypto. And eventually I exited from that company, and then what I really discovered about myself over that time, definitely an interest in the crypto space and the blockchain space, but what I really got motivated to do was help people have better financial opportunities, help people have better financial tools. That was kind of the dream, all along for cryptocurrencies, especially in the early days. This is going to change the world. This is going to change how people spend money. This is going to make maybe some of the big banks, not make billions and billions and billions of dollars off of every single person. We're going to distribute this and make it more democratic, right? And we can democratize finance. And I actually couldn't really do that when I was processing payments, but we started Neo Financial. So I met some of the founders from Skip the Dishes, as you mentioned. We got together and created a new business at Neo. And today we're actually not a crypto company, at least not yet. Can't leak any future secrets, but not doing anything with crypto right now, but definitely something Neo Financial is interested in the future.
Awesome, thanks so much, Kris. Julie, would love to hear about your background.
Sure. So I do come from a traditional capital markets background as a partner in the Securities and Capital Markets Group at BLG. So what that really means is that I help primarily public companies, but also some private companies, do corporate financings, whether that's through private placements, public offerings. We do M&A transactions. And so that traditional background really did help in accelerating the adoption of more crypto companies into the public space. So in 2017, I worked on my first reverse takeover transaction to get a company listed onto the CSE. Since that time, I've helped other companies list onto the TSXV or even the Neo exchange, which is has really expanded. The number of ETFs have really blown up since Pascal's team led the way. But there's also been more and more kind of crypto, blockchain, technology, service provider, public companies being listed in Canada. And people are coming to Canada for that access to the markets. The reason I find this so interesting is on top of the leveraging the knowledge that I have from other industries and applying it here, there's also some very unique legal questions that we navigate through as regulators try to address this new and emerging industry. And so, there was the initial coin offering boom that then was kind of shut down in 2017. But since then, we've seen other companies come back with trying to explore, can we do a utility token offering? If we do a token offering, how can we structure it so it is a security and be compliant with all rules? And it's really nice to work with entrepreneurs that are trying to do things a little bit differently. And it makes me think about how are the rules going to apply to your situation specifically, rather than just kind of putting you into a certain box. We're trying to, because sometimes there's no box to be put into. So we're trying to think through, okay, how will, from a policy perspective, the regulators look at this change? And it's so exciting seeing the new products that continuously come out. NFTs, for instance, they are art. Sometimes do they cross into a security? It really depends on the case-by-case basis, and it's really fantastic to be able to support an industry that is pushing things forward.
Julie. Pam.
I also come from a traditional financial markets background, capital markets, spending about 7 years each at CIBC and BMO. And that was a role I was really happy to stay in. I never actually anticipated leaving until a client of mine who I'd done quite a bit of work with successfully exited his business by selling it to his largest competitor. And then at the time started building 3 new businesses. And the genesis of getting into crypto at the time was he was approached by Gerald Cotton, a name which most of you will be familiar with, to get banking. And Gerald wouldn't meet with him in person. And he said, I won't bank anyone that won't meet with me in person. But what he's doing is really interesting, and he's processing millions of dollars. And given his background in payments, he said, I can do this more safely, more securely, and in a way that will eventually withstand regulation, which has to come into the space at some point. So he approached me as his banker, and he said, do you want to come to Calgary from Toronto and start this business with me? I want to start a cryptocurrency exchange. And I said, that sounds absolutely insane. Why would I do that? He said, think about it for a month. And I was over the Christmas holidays in December 2017, so I did. And January 1st, I literally called him because I know he works on New Year's Day. And I said, you know what? I'll do it. Why not? And so we started to build the BitVo platform. And almost a year to the day of us starting to build it, Gerald Cotton disappeared. So it was really interesting timing. And as part of building the BitVo platform, we built technology that fully automated the fiat payment side, as well as identity solutions. We did that for our own purposes to build BitVo. We felt it was an important part of the business to eliminate some of the risks, to be able to withstand incoming regulation so that we could be compliant with FinTrack and eventually the securities commissions. And we built that technology for our own purposes, but then realized that most cryptocurrency businesses in Canada, as well as online gaming companies, needed that as well. And that company eventually became Patino Payments. So kind of got into it backwards, didn't expect to do it, but it's certainly been a really interesting 4 years. I can't believe it's been 4.
And Pam is definitely a Calgary girl because she rides horses and she skis. So it was always meant to be. So I'm just reflecting on everything that the group of you are saying, and the panel wasn't intentioned to be all about crypto, but I think what I'm hearing as I listen to what all of you are saying is that fintech and certainly financial inclusion is not really possible without blockchain. Like, it is the technology that seems to make that possible. So perhaps that's why in the fintech space we see so much coming from the crypto lens. So just an interesting reflection I'm having, and I usually share what I'm thinking for those who know me. So second question I have for the panel is, mainstream adoption is finally here for the cryptocurrency industry, with rising investment and use among retail investors as well as major institutions. What do you think are the biggest drivers behind mass adoption? And I'm going to start with Kris for this one.
Yeah, I'm not sure it's entirely mainstream yet, but it's getting there, right? And yeah, I think with things like the ability to invest in ETF and not have to understand crypto is really making it mainstream. It's the abstracting away some of the tech, some of having to understand, what is a cryptocurrency trade? How does mining work? Or, what is what is the halvening or things like that? People all across Canada, all over the world are not going to learn all the details about things like crypto or blockchain, but it's the products that layer on top of those that become more usable and more accessible that are kind of, I think, getting us there, right? And we see it with, definitely with investment products, but there are other blockchain products, out there as well. And I think some maybe we don't even know about, right? So they're working in the financial services space now. I work with a lot of companies that are vendors. They purchase products from them or services from them, and it's surprising when I talk to all these vendors how many of them are using some kind of blockchain technology. Again, maybe behind the scenes to offer something else, right? So they're saying, oh yeah, we do identity verification. There's a little blockchain behind the scenes, or we're doing we build a financial ledger system, but there's some blockchain underlying this financial ledger system. And again, I maybe don't learn all the details of how the tech's getting used, but it's mainstream because everybody's using it, and it's powering so many different products and systems that all of us are using. That's my take on it.
Pascal, I think it makes sense for you to go next.
Yeah, so for me, when I'm looking at that question, I don't think we're mainstream yet, but we're on the cusp of it. And when you look at industries in terms of adoption cycle, where crypto is compared to whether internet adoption or cell phone adoption, we're the equivalent of like 1996 with the internet adoption. So you can imagine, like I had a lot of startups at that time, and it felt like if it was mass adoption, and then you fast forward 20 years, that's mass adoption, when without the internet, the economy would have crumbled during COVID. So we're not there yet with crypto, but what I am seeing is the convergence of all the parties that are needed to have mass adoption. That means what? That means a lot of entrepreneurs who are well, you were talking about the brain drain, but the entrepreneurs and the people coming into the space saying that's where I'm going to go. Number two, venture capital investment is very, like last year was $32 billion. And I think we've already eclipsed that in the first quarter this year. And then we're starting to see policymakers also coming to the table. So those are the things that are needed so that there's clarity, and then you get mass adoption. So I think we're a few years away from that, but we're close. And I'm seeing everything that needs to happen for that to take place. Whereas 3-4 years ago, it was still a risk.
Go ahead, Pam.
Maybe just to step back, and because that was pretty granular, but I think there's three, from my perspective, overriding themes that are pushing it to be more mainstream. And I agree it's not quite there yet, but I think those three are time, momentum, and regulation. And the later two will change as time goes on. But I think to speak to time, Bitcoin's been around for over a decade now. For the first half of that time, it was really kind of a cult thing. And then for the second half, it started to become more and more mainstream. And that speaks to the momentum. Once you get a certain amount of momentum behind it, people start talking about it around the dinner table. The news starts talking about it each night. Financial publications that you read now quote the price of Bitcoin beside the price of oil, as well as the S&P 500 indices, and that gets people more and more comfortable. And then the third thing, regulation, I think also gets people more comfortable, gets the average citizen more comfortable, but it also allows all of these financial institutions, publicly traded companies, et cetera, to start investing in the various different cryptocurrencies or in funds that underlie them as well. So those would be the three things I'd say.
Yeah, building on what Pam's talking about with the regulation, I think the key part of that is for big institutions, it de-risks. It makes it feel like it's de-risked a bit because there's some clarity around what is being provided, what information is available, ensuring that there's an even playing field. And the regulators have done a great job of saying, okay, if you're a marketplace, if you're an exchange, you need to do X, Y, and Z to become fully licensed. If you're a public company, this is the type of information that would be material and needs to be disclosed to your shareholders so that they can make informed investment decisions. I think that helps so much, and I think there's other things like having the ETFs that makes you can have access to or the volatility, the upside of cryptocurrency without having a major impact on your tax returns, because you're only ever keeping your investments in fiat, which can help just reduce those burdens and those hurdles of entry. The other thing I think is interesting about where we're at in terms of adoption is that the product development that's going on in this sector, the continuous evolution, means that the early adopters have something new to get more entrenched in and to make more profit on, and the mid or late adopters, they can still access the market in a different way with some more like old methods, whether that's just purchasing Bitcoin, whether that's investing in a public company that has an underlying interest in cryptocurrency, whereas some of the more early adopters are deep into the DeFi space and staking, and we do see some of the exchanges in Canada offering those staking capabilities as well, which I think is going to push more and more adoption and more entrenchment of cryptocurrency, because people see that there is value to be made. Another thing I think is so interesting from a business perspective is that you don't have to be a cryptocurrency company to use cryptocurrency. And there's a panel, I think, tomorrow on putting Bitcoin or crypto on your balance sheet. And seeing companies like MicroStrategy, or seeing companies like, there's a small restaurant chain in Canada called Tahini's, who invested in Bitcoin, made 460% profit, sold, and then reinvested it into their company to grow their company exponentially. So there's ways that you can use cryptocurrency without being a crypto company, and I think we're only at the start of that. So I do agree with, we're not at the mass adoption yet, but we are at an inflection point.
And just to capitalize on that, currently the crypto industry is growing faster in adoption than the adoption of internet at the same point in its life cycle. So to be fair, we all use the internet now, so maybe this doesn't seem as strange, but any technology getting adopted that fast is not something that we want to ignore. And I just think it's an important point that Kris noted, that companies are using blockchain and you don't even know. There will become a point, I think very soon, and certainly once we get past mainstream, no one's going to care that it's on blockchain. It's just the right technology to meet a goal. But it's important to understand where you can have your successes and where your companies, it's not Asmoms, who do you say, Tahini's? They wouldn't have had access to grow their existing traditional business if they didn't have access to this asset class. So we'll hear more about the Glen Rose Foundation as well later. I think it's a stunning example. So there's just many ways you can be involved. It doesn't have to be just being a crypto exchange or someone who's providing those direct services. So thank you all for that. Next question. Blockchain's strongest use cases have always been in financial services, which we've definitely been talking about today. What do you think are the key business problems that blockchain technology helps to solve, and what emerging services will change how we engage in the economy? And I'm actually going to start with Pam for this one.
So I think the key problems that they solve are time and cost. So it's a faster and it's a less expensive way for records management, essentially, and that can be used across a variety of industries, finance being probably a main example, but right here in Alberta, oil and gas, particularly things around royalties and wells, certainly translates there as well. Probably because I'm in the finance space, I think the biggest disruptor or the biggest use case in the next couple of years will be in the decentralized finance space or the DeFi space, and that spans a number of different blockchains, whether it's Ethereum, Cardano, Solana, and I think 2021 was probably the year where DeFi started to become a little bit more mainstream, and you saw a number of different protocols popping up and a number of different applications coming to light, and I think that momentum will accelerate, because when I go back to the two problems that it solves, time and cost, traditional finance has historically been pretty slow and pretty costly. The big banks make a lot of money off of processing transactions slowly and costly. So decentralized finance, I think, will help alleviate a lot of that pressure, really disrupt the traditional financial industry and also benefit the end consumer by lightening the burden in terms of what they're paying for their transactions, whether that's right here at home or making transactions globally as well.
Thanks, Pam. Kris, over to you.
Yeah, I definitely agree with those things. I think the potential to add a lot of transparency to the financial system is huge, and I know that again, I'm trying to build a banking competitor, and when we first started Neo, it's like, oh yeah, I don't know how banks work. Even that was the first step. It's like, what's actually happening at these banks? How do these products even function behind the scenes? And there's actually not a lot of transparency in what happens. Every single one of us in this room has money at a bank, and what's happening to that money right now? What are they doing with it? Where is it going? Is it even still there? Like you're basically just like, I hope so, and you don't have any sort of transparency. But with blockchain technology, especially when it's a distributed system, it's public, and it's not owned by one entity. You actually have the ability to find out. You have the ability to find out. Where is this money? Where is it going? Where did it come from? Who's owning it? And I think that is going to really change the world. I think that democratization, one of my favorite words, of the finance space, it's still going to take, I think, many more years to kind of disrupt finance for all of us. But I think it's a really positive force. Yeah.
Thanks, Kris. And I always laugh when people think that crypto is for criminals. I'm like, no, that's cash.
I was
Cash
just
is for
thinking
criminals. Pascal.
Yeah, so I think there are a lot of key words here that Kris and Pam shared that I think we need to really keep in mind. The two is decentralization and blockchain. One's a technology, the other one is the theory behind it, because you could use blockchain technology that's centralized. Like, for example, CBDCs would be an example of that, where it is centralized and owned by an entity and not necessarily empowering anyone. And you could also decentralize without blockchain, which means you don't have the immutability of the blockchain. So the real power comes when you mix those two together. So I hear a lot of crypto, blockchain, decentralization. We need to understand what those terms mean. So the power is when they come together, and when those two things come together, three main transformational things can happen. And right now where we're at in the crypto sort of evolution is still identifying the layers upon which things are going to be built, right? So if we go back in the internet days, we had TCP/IP, HTTP, voice over IP. These are protocols that were not monetized, but utilized to build a lot of applications that we use today. This is where we're at with crypto right now, is building those layers. So what comes out of that once those layers are mature and robust is three things. The first is tokenization, which is basically enabling fractional asset ownership, which is going to empower a lot of individuals to be able to start owning different things, even though they don't have millions of dollars, either for real estate, for art, for assets, and those kind of things. The second one is, and this was a big theme at Bitcoin 2022, is the collateralization of crypto assets, which means now with that asset you'll be able to use it as collateral to take on loans, to generate income, to really give yourself financial freedom versus the buy, hold, and sell, which is go from fiat to crypto back to fiat. So the bankability of crypto is coming, and that's going to be a huge transformation. And the third one is decentralized apps. So this has nothing to do with financialization, but if we want freedom of speech, if we want to give back ownership of data, that is going to be built on Web3, which is going to be built on decentralized blockchain technology, and that's where all the Web2 companies are getting blown up, like Facebook and others are going to get disrupted by decentralized applications, which there are some, but they're still very, very early. So that's the next 10 years.
Yeah, and actually I like that you pointed out Web2 companies, because they tend to make their money on the walled garden approach. I keep all the data and that's how I make the money. But Web3 is truly, we're sharing the information, but we're actually making money on top of that. So it's very different switch in business to think of the information as not necessarily your secret sauce. So that is incredibly different. Julie, did you want to add anything?
Yeah, just the only thing is a lot of what we're talking about is where we're at right now, and that reality is that blockchain is primarily being used as a financial tool, whether that's for payments or investments, but it's because that's where the money can be made right now. And I think that there's a lot of potential for blockchain as technology to be used by the public sector. So when I think about whether it's health records or like real estate, like our Torrens system, I think that there's a lot of room for growth. And that might be a big investment from our governments to change and move their old systems onto the blockchain in a way that will protect the data moving forward and make it more secure and moving forward. But there's not really a lot of money to be made on that transformation, and there's not really a big push for that yet. But I do think that, 10 years out, once we have more proven capability, once there's more things built on various blockchains, that will be something that developers will want to be looking into.
And actually, I'm really glad that you pointed out the government angle, because just a topic that I would love everyone here to take away and think about is your digital identity. Many people think, oh, they're tracking me and everything. No. These are private companies that know everything about you right now, who are monetizing the data about you. If the government is instead the first issue of your digital credential, you already trust them with all that information about you, and you're taking back the power of that privacy, and then we're deciding how it's going to be monetized by choosing to share it. So this, we're talking about the Web 2, Web 3 difference. And so this is something really powerful that governments can be involved in that actually empowers citizens. So I don't think we actually have a digital identity panel, but if anyone wants to talk digital identity, I would love to talk to you. Thank you guys, that was awesome. So how do you think the entry of major banks, and honestly, this is mainly the US, we're not seeing it in Canada, unfortunately, but how is the entry of major banks and investment firms changing the cryptocurrency market? Do you think it has achieved a level of integration where it's becoming and starting to trade, just like another part of the tech sector? And Julie, I'm going to start with you.
Sure. I don't think we're there yet. I don't think that crypto is equivalent to or subsumed by technology. I think it still is its own thing. And I think it's, I look to where cannabis was 4 years ago, and I think that that's kind of where cryptocurrency is. We have enough people that are starting to say to their brokers, look, I want to have access to cryptocurrency, and if I can't do it through you, I might move my whole book somewhere else. There's not a huge number of those people doing that yet, and they're luckily are able to sometimes personally invest through ETFs or other things to get that access. But if they do want that direct ownership, some of the banks in Canada are going to have to move, or other disruptors will have to come out with other products to help them. The one thing that is good is that in Canada, there are 6 exchanges that are fully licensed right now, with more in the process of getting their registrations. So Canadians can have some comfort in trading directly on exchanges. But I don't think that the institutions are quite there yet in Canada.
Thanks, Julie. Pam, I'd love your take, considering you've come from that sector and now you're disrupting that sector.
Yeah, my take is not from my background, but it's from today. So today is no exception from any other day. We were literally walking over to this conference lamenting about how difficult banking is in the crypto space in Canada. I think it's probably one of the toughest jurisdictions globally to just get a checking account. We're not talking about getting a loan or getting an investment of any kind, but just a day-to-day checking account for banking in Canada for crypto-related companies has never been more difficult, I would say. And I think that that's really interesting because, particularly on the exchange side, we've never been more regulated. We've now all been required to be FINTRAC registered money service businesses for 2 years. We've probably, for some of us, gone through our first FINTRAC audit to success. For custodial exchanges like Bitvo, we're required to register with the Securities Commission, so we're at least in dialogue there, if not already received our registration. It's a time when I think banks should never be more comfortable, and they seem to be the most uncomfortable I've ever seen them. And we're lucky here in Alberta, we have some supportive banks, but I think it's increasingly difficult in every other province. And certainly on the Patino side, we have customers come to us almost every day where they operate in the crypto space and they're being challenged by their incumbent banks. But I thought the last part of your question, Janine, is it trading like the traditional financial system, is interesting because I don't know if this is how you meant it, but I took it as How is it trading in terms of price fluctuations? And this year, more than any other year, and maybe because of the disruption of financial markets broadly with what's going on in the Ukraine and fears of inflation, it's actually trading right in line with the financial markets, and particularly the tech sector. So as of Monday, the NASDAQ, which is the most tech-heavy index, was off 14.7%, and the price of Bitcoin was off 14.3%. So it's almost trading perfectly correlated to tech, which I think is really interesting and not how it has traded historically.
You're right, we normally don't see that. And I won't put you on the spot to say, well, why? But Pascal, over to you.
Yeah, so I'll disagree with with that in the sense of there are periods where correlation is high, and there are periods where correlation is very low, and it really depends on the market sector. So when we look at the specific question on trading specifically, look, Bitcoin and Ethereum are the two largest by market cap, so there's liquidity in those two, and with the large institutions coming in, we've seen a lot of the arbitration plays sort of get eaten out of the market. So the cash and carry trade, which a year ago you could basically buy spot Bitcoin and sell the futures, which was complicated to do for an institution. You could carry probably about 20 to 30% a year in terms of APY. This year, because you can now buy our ETF and sell BITO, which is the future ETF, way easier, you're capturing 4 to 6%. So that's an example, but there's still a lot of arbitrage opportunities if you go down the chain. And when you go beyond Bitcoin and Ethereum, the market caps aren't big enough for the large players to play in. So that's one. There's still lots of opportunity to be captured. So it's not trading from that perspective like the tech sector. The second one is we have to understand that crypto is mark to market instantly in real time, 24/7, 365. Almost from the day one of the existence of that project. So most technology companies, when they make it to the public markets, have a certain maturity to them. They've been in business for a few years. They have some stability. So when they trade on the markets, there's some volatility, but not as much as crypto, because people always talk about volatility in crypto. No, if you think about it, if you were to mark to market my startup 25 years ago when it was 4 of us in the basement, on a second by second basis, you'd say that startup's pretty volatile, right? That's what crypto does. It mark to markets your valuation on a daily basis, which is why it seems volatile, because some of these projects are startups. So I think, maybe Bitcoin is starting, because there's so much liquidity from institutions, is starting to be a little more predictable, but the whole space itself does not trade at all like the technology sector, and the volatility will still be there, which is an opportunity. I always say volatility is the opportunity. So,
thanks, Pascal. And you point out something really important there. I just want to expand on it. So Ethereum, and this is last year's numbers, but about $1 trillion moved across Ethereum within, I think, the first 8 months of the year. But people don't necessarily trade as much Ether as they trade Bitcoin. Like, people treat these two differently. And the value of Ether, and I think one of the reasons the value changes so differently is because there's things built on top of Ethereum. And that's where the real value is in all those applications. And yeah, so it's a little different to value Ethereum in my mind than something like Bitcoin, where the value prop's pretty clear. It is the Bitcoin itself. It's the store of value. So I think that when you look at how these assets trade, you actually have to have a little bit of an understanding of what makes each of these chains different, because that's how you're going to know to capture value.
They all solve a different problem, and you have to understand that before you put, that's why when they say, saying I invest in crypto, it's like saying I invest in stocks. There's different assets.
I invest in stocks, lots of them. Kris, over to you.
Maybe I'll talk a bit more about the other side of the question, not so much on the investment side of it, but more on the confluence of big banking institutions with crypto. And we're not all able to log into our online banking at the big banks today and just trade crypto. That'd be cool. But I think what's exciting to me as someone in the fintech space is that there's a bit of a race happening right now. And the race is, will those big institutions finally start offering businesses and everyday Canadians better services and access to things like crypto investments and trading and those sorts of things? Or will they move too slowly, and other fintech companies will actually create a new ecosystem that give us different choices, right? And I think if I think about my phone, right? I'm pretty old, so I remember when you'd buy a phone, even this is going to definitely date me. You get a flip phone or something like that, and there are no apps on your phone. Like, it just is what it is. You get the phone and you use it, and maybe it does have some features. There's a calculator. You can make calls. You can text people, but it is what it is, right? And then along came this sort of ecosystem replacement, right, from companies like Apple, where it's like, hey, the customer can now choose all these different apps. And the customer, if you don't like your SMS app, just don't use that one. Get a different one. If you don't like your, address book, or you don't like the social platform you have on your phone, just change it, right? Just pick what you want. And you get these choices. You don't get that today in these big institutional banks. They're not letting you have access to a marketplace. They're not letting you choose these different services. There's no competition inside them. But that's what fintech is bringing to the table, right? So if fintech companies can win this race, what we can get is an ecosystem of financial services and financial products. Do we even need those big institutions as much anymore? Or is it, are each of us now able to say, well, I'm going to get my mortgage here from a DeFi solution. I'm going to do my investments over here. I'm going to use some sort of crypto yield investment, right? And I think, and by the way, I'm going to store my wealth in crypto as well, or maybe some in fiat or different currencies. And having that optionality to just choose what you want when you want it from a selection of products is not available to these big institutions. And I think, again, they may eventually catch up, but what I hope happens is companies like Neo Financial and other fintechs all kind of blow up into this big ecosystem, giving everyone choices, and we make it, with things like open banking coming along, we make it possible for every single person in Canada and every single business in Canada to just have access to a better variety of products, right? And then we don't have to worry that the big institutions are holding us all back from being entrepreneurs or having access to crypto stuff.
Thanks, Kris. And there's such a momentum to what you're talking about. We've never gone backwards from where we are right now, right? Like, everything is more open. There's an app for that mentality. We expect on-demand financials. Like, we expect all these things, and boards are starting to expect it too. And just to give you a real life example, you can get a Bitcoin-backed mortgage and buy a house. I had one of my team members, Toronto's too expensive, he's moving to Calgary, and there isn't an Ether-backed Bitcoin or mortgage, but he had enough Ethereum that he sold it and was able to purchase a home in Calgary mainly for cash. So these are real financial transactions that are helping people, and people are living their lives that honestly have nothing to do with the banking system. He would have gone for a Bitcoin-backed loan, but he had more Ether because he'd been in for longer. So there's actually real big changes happening in people's lives. That's the biggest purchase most people make in their lives. That's massive. So your kids, our kids, they're going to be living in a completely different world. So I think it's important to understand what's coming. And with that, I would like each of these lovely panelists to take out their personal crystal ball and talk to us a little bit about what you think the next few years are going to look like in fintech. There's shifting regulations. The metaverse is going to be huge, I have no doubt. And I know we talked a little bit about Snow Crash last night. And there's lots of market volatility. So from your perspective, what do you think it's going to look like? What do you think it's going to look like in the next few years in fintech? I'm going to start with you, Pascal.
Sure. Probably not going to be a popular answer because it's going to be massive, but here's what's going to happen, my prediction, like any industry, whether you look at the telecom days, I lived through that, the internet boom, the open source craze, the mobile wave. What happens is there's this sort of accelerating growth. So basically the entrepreneurs come in, which we're at now, a lot of great ideas. The VCs start coming in, and then the VCs start FOMOing in, which is where we're at kind of now. When you got $32 billion a year and growing this year, chasing ideas, there's going to be some amazing ideas, there's going to be some terrible ideas. And over time, there's a bubble that gets created, and that needs to pop. And I think it's positive destruction that needs to happen. So what's happened? Some companies are going to fail, some projects are going to fail, some are going to consolidate, and those that remain, that win, are going to transform the world. So, and it's happened every time, and every time there's new disruptive innovation, it becomes part of the foundational layer of society, and that is what's going to happen here. But there's going to be a little bit of a bumpy ride in the next little bit, because there's so many new projects, and they don't all serve a purpose, and they can't all exist. So for me, it's the bumpy ride leads to the transformation of society through crypto and blockchain.
Thanks, Pascal. And once the panelists are done with their answer to this question, we will be going to questions. So if you guys and gals in the audience want to store those up, we'll be shifting to that right after these responses. So I'm actually just going to head down the line. So Kris, over to you.
Yeah, so the future of fintech, I think I mentioned it, in my previous answer a little bit. I think what we're going to see is choice, right? Fintech is going to bring more choices, more options to everyone in every aspect of finance, right? And I think the other change that's coming is increased confidence. I think this is something that we've worked on at NEO a lot. People are afraid of finance. And Canada is actually one of the harder markets when it comes to that problem. It's intimidating. It's scary. It's risky. It's something that you leave to accountants who are experts, and you don't know enough about yourself. You don't want to do your own taxes. You might make a mistake. Everything about finance has everyone walking on eggshells, everyone tiptoeing, right? And what I think fintech is doing is giving people confidence and choice, giving people more financial literacy, understanding of the monetary systems, and even of their own money. And that's going to, I think, really be transformative in the next maybe 5 to 10 years, seeing each and every one of us and all of our friends and families and many businesses having more confidence to make financial decisions themselves, to leverage things like distributed financing, or to make the right choices around when to grow their business, when to be conservative, when to be aggressive, how to leverage capital. Again, making a big purchase like buying a home. What's the best way to do that? What are the best terms for me? How is this going to impact my life? I think people are going to start having more confidence in tackling those kinds of problems when they're assisted with more and more cool financial technology.
Thanks, Kris. Julie?
I think that the future of fintech is going to have more clarity, and that's really going to come from our regulators on a global basis. Because one thing that I find so interesting is, as I have clients come to me and say, my competitor is doing XYZ, I want to do it too. One thing we have to remember is that right now everybody is governed by their local jurisdictions and or the places where there are customers, if you can think of it like that. And the rules in Canada are different than the rules in Singapore, which are different than the rules in the UK. And sometimes the rules aren't even clear yet, or they haven't been developed yet for the product or the thing that client wants to do. And maybe what their competitor is doing is totally legal in Singapore, but totally illegal in Canada. And we're still working through that murky water, especially on these emerging areas, DeFi, NFTs, Web3. I'm not even sure what the legal issues are going to be there. And so I think as this continues to roll out and mature, we're going to have more clarity, which is going to build up confidence and adoption.
Thanks, Julie. Pam?
Yeah, I think right now you're really entering the use case phase. So I think for the first decade of cryptocurrency and blockchain, you're really sort of at the idea phase, and that resulted in thousands of different cryptocurrencies and hundreds of different blockchains that had potential use cases in mind. They were developed for a use case, but very few of them were actually being used for that use case over the first decade. Whereas now, with the rise of decentralized finance, with dApps, with the metaverse, you're actually starting to see some of those use cases play out, which I think will result in a consolidation of the companies, but also of the particular cryptocurrencies and blockchains too. You'll see the ones that really didn't have good use cases go away, and the ones that do have real world use cases come to the forefront, which will add to the credibility. The ones remaining will truly be credible. And then the second thing I think is you'll see this segment of the financial world be more and more integrated into the traditional financial world. So regulation will come in, to Julie's point, and the two worlds will fold together. And I think that they'll both have their various own different use cases. Traditional finance will still have a role. Decentralized finance will have an additional role, and you'll see the two start to coexist more together as opposed to combatively.
Thanks, Pam. So over to the audience, please put up your hand. And one of the gentlemen here. Okay, perfect. All right, over to you, sir.
Yes, Kris. The box is actually speaking. Sorry.
Speak into the box.
Yeah, we just need you to speak into the box.
Is this thing on?
Yeah, you have to raise it more. too.
Okay, Kris, I held back a little bit of a chuckle when you said that open banking is coming, because I've been hearing that since I was 30 pounds lighter and had dark hair. What gives you that kind of confidence? Because every time we get even close, there's either an election or people lose taste.
It's a good question. To be honest, I kind of agree with you that open banking is not coming tomorrow. It's probably 5, maybe longer years away. But it's still on its way. And I think even if open banking regulations don't all sweep in and open that market, what's happening is the idea that open banking is valuable, that's spreading right now, right? And I think the idea can be as powerful as the regulations, right? So was open banking something people wanted? Really, a lot of people didn't even know what it was or how it would benefit them in the past. But now, a lot of people are like, yeah, I want it, right? The idea is taking root. And that's what is exciting to me, the idea that people care about having the freedom to choose. People care about who has their data and what they do with it. And I think even if open banking regulations, again, aren't here, those ideas being in the mainstream, in our consciousness, part of our culture, those ideas are going to foster new startups, new innovations, more choices, more products, and you might not get, again, everything that open banking promises right away, but you will start to get some of the benefits anyway by being able to work with a company like Neo or Wealthsimple or Coho or someone like that who can offer you a more open banking sort of friendly product suite, that treats your data with respect or that gives you portability and that sort of thing. Does that make sense?
All right, and I can't see who has, all right. This side.
Cool.
Or what, I can't see as well because the lights, so you guys point to the next.
Yeah, sorry, putting my hand up louder since I got denied the last question. Thanks very much for a great panel, guys. We've got so many things. As somebody who I guess was co-led the legal team that introduced the first smart chip card to Canada, and as someone who was, let's say, very involved in the blow-ups of Enron and the financial crisis in terms of understanding the world of derivatives. My question is, the financial or the regulatory environment that the neobanks face, I think received quite a jolt in February with the proclamation of the Emergency Measures Act. I suspect, although you don't have to say it quite as starkly as I will, that your regulatory budgets went from zero to something meaningful as a result of the sweeping, if you will, of those that haven't been regulated under the regulations that are put out by the Canadian banking industry, largely driven by the Canadian banking industry. So I wonder if you can comment on that.
Is that a question for me?
For everyone.
I got the last one, so I'm out.
Oh, no, I want to hear that one, actually.
Yeah, so I mean, you're right in that we have different clients that are addressing the Emergencies Act and those provisions because they now have to, so in particular, like our crowdfunding platforms have to think about regulations in a different way and have to think about how they are responding to these new provisions that have been put in. But I haven't seen a lot of companies that operate in this industry already have a robust regulatory group, and they already have relationships with the regulators. And so this might be a new layer that's being added on to address a particular circumstance, but I don't see this as like a whole, like, oh, now we have to start paying attention to the regulators. Rather just, some different clients have to pay attention maybe to a different use case.
Yeah, I would agree with that from an operations perspective as opposed to a legal perspective. When we started BitVo, we were completely unregulated and not required to be so, but we built the business to withstand regulation because we knew it had to enter. And similarly, on the Patino payment side, we're a payment service provider. So there is incoming regulation to that sector, which is not yet here in Canada, but we operate our business today as if it were. So I think, Julie, to your point, most businesses, legitimate businesses, were already operating in a way that those actions didn't necessarily change our business model or require us to staff up materially.
I'll take a different approach. It has nothing to do with the 3AQ business. We're fully regulated from day one, and we have to comply to be able to bring out these products to Canadians and around the world. But personally speaking, I would say that let's not forget the power of the demand that people could bring to the market when they really do want a specific service or not. We look in the U.S. with the infrastructure bill last year. The government had to change their tune from, hey, let's put in some things here that could be detrimental to the industry. Now you have people like Janet Yellen and others who are reading a great script, but it's still a powerful script that makes sense for crypto. And I think we've got to see the same thing here when people want services, like Kris was saying, when the consumer wants something and voices their opinion, ideally policymakers show up and do the right thing. So again, those things were concerning, and we saw a lot of changes in the industry, but hopefully we can continue to be vocal and demonstrate that we do want that flexibility, we do want that ownership, and that fintech and crypto is here to transform the world and our society, and ideally our politicians listen and do the right things.
Thank you. Next question, please. Go ahead.
So I have what I hope is a little bit simpler question. So I'm building a Web 2.0 company for an industry that's barely digitally literate. At what stage do we start putting in some of the concepts that you're talking about? Like how do you, I guess, understand those underlying drivers that make it seem like an industry is ready to adopt some of the stuff that you guys are talking about?
Sure, so happy to jump in on that. So again, not everything has to be blockchain enabled, and not everything has to be Web3 enabled. I would say that things that have to do with personal identity, with data, like we were talking, that I would definitely keep my eyes and ears open, saying start building a Web3 today and use that as a force, a competitive force, to demonstrate the fact that you do care about people's data, that you do care about people's privacy. If you're doing an app that has a service and the data is not necessarily stored on your servers, or you're not collecting that much information, but you're really just providing a service, then Web 2 will be a faster, easier route to create the solution. It's just the technology stack is just more evolved. So again, not everything has to be blockchain enabled, but I would just say, if you, going back, privacy and data and personal information, if that's core to the business you're generating, I would definitely explore Web3 versus Web 2 today.
Just to add a comment too, like the customer is always right, like no matter what, right? In any business, any product, people are going to want something, and you're going to be filling a need or solving a problem. So I would say talk with your customers, talk with that industry, whatever industry it is. Find out what are their concerns today, and what do they think their concerns will be in the next 5 years or in the next 10 years. And yeah, if you see a fit for Web3 technology in the context of their problems and their needs and their wants and their asks, then it might fit. But if you don't see it, then it's maybe not there, and that's okay, right? You still build a great business or make your customers happy. And hey, maybe their needs do develop 5 years from now to suddenly want Web3. Hey, maybe you can sell them products twice. That's maybe even better. So yeah, you never know.
Yeah, just one quick comment, because I see Danielle standing up there, but we used to joke, it really depends on your business, and without knowing your business more, it's hard to say. We used to joke that 3-4 years ago, you could sprinkle some blockchain on a business. I think Janine actually coined that term, so I'll give her credit there. And that would add value, but that's not true unless it actually makes sense for the underlying business.
Yeah, and that's true. I tell most people you don't need blockchain. Honestly, because most people ask me, I'm like, no, you should use a database. no, you should use that. So don't try to jump to Web3. And I know we're talking about fantastic changes that are happening in our society, but it's because it makes sense and because it solves a problem. So definitely, I always tell people you don't need to blockchain it. Like, it really needs to actually fulfill a few very key things to be needed. And,
Did you want to say anything to wrap up?
well, I just want to thank the wonderful panel for being rock stars and sharing all their expertise with us today. So if I could get a round of applause for the panel, I appreciate that.
All right.